Hello, Carissa Dorado here to talk to you today about financing investment properties. I'm a mortgage loan officer with Premium Mortgage out of the Buffalo and Orchard Park office, and I'm also a landlord myself. So the first thing we'll review is the loan-to-value ratios underneath some different scenarios. So let's say you're purchasing a single-family home, you're going to be required to have 15% down. If you're purchasing a 2 to 4 unit property, you're going to be required to have 25% down. On refinancing, if we're just looking to change the rate or the terms, on a 1 to 4 unit property, you are going to be required to have a maximum loan-to-value ratio of 75%. If you are looking to cash out in your investment property, a single-family home is going to have a maximum loan-to-value ratio of 75%, and on a 2 to 4 unit property, you're going to be required to have 70% loan-to-value maximum ratio. So rental income. Rental income from the purchased property can be used towards qualifying income. A rental property rider is going to be required if the property is currently being rented out, and we are able to use 75% of the fair market value as determined by the appraiser. So for an example, let's say the gross monthly income from that property is $2,000. We can take 75% of that, that's $1,500, that we can use towards your qualifying income. There are some restrictions that might apply to this though. Next, some items to note. No gift money is allowed to be used for your down payment or closing costs with a purchase. Reserve requirements are based off from the number of finance properties, and the interest rates tend to run a little bit higher than the regular rates you would receive if you were purchasing your primary residence. Cash out refinance on an investment property. Here's where it gets a little tricky. So when you are trying to refinance a property within the first 6 months of purchase, the new loan amount cannot be more than the actual documented amount of the borrower's initial investment in purchasing the property, plus the financing of the closing costs, prepaids, and points on the new mortgage. After 6 months, though, that restriction is lifted and you can actually use the fair market value and then the corresponding loan-to-value ratio based off the previous chart. There are some limits to the number of finance properties within the investment piece of it. So the maximum number of finance properties for a borrower can be up to 10. If the borrower has 1 to 6 finance properties, the standard policies apply, the loan-to-value ratio, minimum credit scores. However, if a borrower has 7 to 10 finance properties, the mortgage loan amount does have some restrictions and the credit score does need to be over 720. Thank you so much for your time, and I look forward to assisting you or answering any questions that you might have about investment property purchases or refinances. Thanks.